Hey everybody, welcome. We'll just give people just a minute or so to join and then we'll get started. All right, we're at 11:01, so I won't waste anybody's time. Let's go ahead and kick it off. Thanks everybody for joining our webinar today. I will kick it off with a couple of quick housekeeping items. We will be recording this webinar and you'll get a copy of it after we're done. So take notes, but also rest assured that you will be able to access the slides and the recording after the webinar. As we go along, feel free to ask your questions in the chat. We will have time for dedicated Q&A at the end, but as you go along, we may just pop in and answer your questions as well. So feel free to do that as we go. But beyond that, I'm really excited for this conversation. I'm excited for you guys to hear from Bradley and Joey today. And I will kick it off with some introductions. So Joey, do you want to go ahead with a quick intro?
Sure. All right. Well, for folks that I haven't met yet, my name is Joey Bouchard. I'm the CEO and founder of QuoteWell. Very quick background. Spent 6 years at a data and AI company called Palantir. IPO'd a couple years ago. While I was there, I had a niche myself in insurance for a couple years of that. So worked with some large carriers. And then after that, worked at Aon for about a year. Helped spin up a couple different MGAs internally for them, as well as on their carrier consulting team. And then after that, started QuoteWell back in 2021. So I've been about 3.5 years at this point, and here we are today.
Awesome. Bradley?
Hey guys, my name is Bradley Flowers. I'm the founder of Portal Insurance. We are a personal lines and commercial lines agency based in Mobile, Alabama. We write business all over the country. Also the co-founder and co-host of the Insurance Guys podcast, and I'm a proud QuoteWell user.
Fantastic. And then one thing I forgot to actually introduce QuoteWell too much here, but from our end, so we are a commercial insurance wholesale brokerage dash MGA. 95% of what we write is not admitted. Focused areas, although we do have licenses in I think 44 states at this point. Core focus is Texas and contiguous states, plus a little bit more up the middle of the country there.
Perfect. And I'll give a quick overview of the agenda. So we'll go over a little bit of the commercial insurance landscape and kind of what are the factors that are influencing the way business is done right now. We'll go a little bit into what is a niche, and then we'll talk a little bit more tactically about how to build your niche. And we'll hear from Bradley about how he's done that at Portal. And finally, we'll have time for Q&A at the end. So I will go ahead and kick it off to Joey.
Great. All right. Well, first off, hoping to make this a bit more of like a conversational panel. So Bradley and I might interrupt one another throughout. And then likewise, like Mary said, if you want to shoot over a comment or question throughout, then she might post to answer that in the middle of the presentation as well. But going off of, I think a stat that will surprise nobody here is that the hard market is fueling E&S growth. What actually drives a hard market's a complicated mix of factors. There's politics at the state level, there's macro interest rates, there's lots of different, social inflation, a ton of different things that are really making pricing for admitted products a bit more difficult. And so that's fueling more growth in the E&S market. Admitted carriers have become increasingly risk averse and saying, listen, one of the better ways for us to return to profitability is just declining business that traditionally we may have written before. And so there's a chat there, and I'd recommend folks, there's actually a great report that AM Best produces about once every 2 years about the surplus lines market. So this chart was for 2024, released a couple weeks ago. But you can see across both personal lines and commercial lines, we're almost at 12% of the market being non-admitted now. And there's no signs of that necessarily stopping. There are a couple pockets in there that are continuing to be almost exclusively non-admitted. long haul auto definitely is a tough spot. Seeing some excess and umbrella is a little bit harder to place. And then there are other parts that are just harder from a pricing perspective. Property in particular, and this is both from a homeowner's insurance in the personal line space as well as on the commercial side of property. In certain areas of the country are affected a little bit more than others. And so, from that, that presents both challenges for agents as well as different opportunities.
Personally, I think anything that's worth writing is probably going to be non-admitted.
Well, and that's something where, what we're getting down there is that it requires a little bit more creative solutioning. It's not just pumping numbers in a portal anymore. There's usually more risk advisory that the agents are really going to be driving, where that's where non-admitted tends to play. But one thing that, again, a stat that probably surprises nobody here is that commercial surplus lines premium makes up over 25% of what's being written now. In certain geographies, it might be 50 to 60%. And so if you're on the coast, you're probably going to see, for folks that, at least within our markets, like Houston-based agents, we'll say, about 50% of what they're writing is going through a broker and MGA today, given these trends. And especially there's some other factors that are driving more growth in non-admitted insurance versus the admitted market. So anything that's a new insurance product, carriers tend to release as a non-admitted product first and say, listen, we want to try and have this be a non-admitted product. We're going to experiment with it. And then eventually it might move to the admitted market. Now, I think that that's the theory that a lot of carriers have adopted really a decade or two ago, thinking that would be the path. But in practice, it's been a bit different. For a product to be admitted, it needs to be approved by the State Department of Insurance at a state-by-state level. Now, if it's a new technology, let's say like drones or a lot of stuff in the gig economy, the regulators might not understand quite yet how to actually interpret that risk. They'll say, listen, start as a non-admitted product, we'll learn a little bit more, and then we'll work it back into the admitted side. And there are some cases where it works and some cases where it doesn't. Cyber is a really interesting case study where cyber insurance has been around for a while, and it really does vary state by state. In California, where they write a bit more tech risk, there are more admitted cyber product solutions versus in other states where it's not as prevalent. They're probably going to stick in the non-admitted market even. I think given that trend, we're going to see more of a buildup of new insurance products proliferate almost exclusively on the non-admitted side. And
I think you also have too, just to add, I would love to get your thoughts on this. I think you have some carriers that choose to go the non-admitted route just simply based on control of pricing. They don't necessarily have to worry about the rate filings and that sort of thing. So in a lot of cases, we'll tell customers, if you're a good risk and you run your business the right way, you might even possibly be looking at the very least pricing that is more comparable to the business, or even more favorable pricing in some cases.
I think that's true. I think that's going to increase more over time. By and large, I still think the general trend is that non-admitted will tend to be a bit more expensive. But I think states where they are leaning more into non-admitted, that's absolutely true. If you want to think about non-admitted insurance as really a truly free market product where prices will meet demand where they think they should be at, I think we'll see more and more of that. Now, there's also an onus that comes on agents for that, because if something is admitted, that the regulators have come in to say, hey, you know what, you can trust this product off the bat. And so, it's got core coverage, et cetera. But for non-admitted products, that's something where you should really be familiar a bit more with those products, and also, have a good conversation, whether it's with the underwriters at the carriers or underwriters at your brokers, to really make sure that you've got the right coverage there. But I'm sure Bradley's probably had a couple experiences where he might be surprised where non-admitted products have been, again, more comparable than others. And I can say that's particularly true, especially in certain soft markets. So cyber, I think, is a good example, where I don't really see too much pricing discrepancy between non-admitted and admitted products there. In property, I think that's probably still where you'll see a little bit of a jump there versus not. Or more frequently than not, you could see something where, hey, it's cheaper, but it might exclude wind. you might need to buy that separately. And so it really does depend product by product. But one or two other things here. And so climate related risks have been generally driving up the prices, especially on the property side. But maybe with the events this last week with the hurricane that hit North Carolina excluded, it actually wasn't as bad of a hurricane season as I think a lot of reinsurers were predicting there. And so we're actually starting to see the property market soften a little bit because of that. So again, lots of macro factors where it takes a little time to pan out and how that's going to dictate pricing and where things are moving.
The other thing that's
Um,
interesting on that is I think your more predominantly ENS markets, you can use those to predict what's going to happen in the rest of the country.
mhm,
So like, for example, we had some big hotel clients that got some favorable renewals this past year. And
mhm.
you start seeing that trickling. And then the flip side of that is a few years ago when things started hardening, it hits the ENS market first usually. So it's a good indicator of what the admitted carriers are going to be doing really soon.
Yep, I agree with that. And that's something that we can say where, quote wells increasingly gotten more, you know, good property capacity, some tier one, tier two coverage with wind. And so the fact that we're able to provide more of those solutions, again, it might take a year or two to really trickle down. But I think it does show as a bellwether for the admitted market as well. But regardless of all of that, I still think that the bigger factors, if I were an agent, one takeaway from at least these last two slides is that the growth in non-admitted insurance probably isn't going anywhere. If anything, there might even be some more accelerating factors. And with that, it's not easy. Non-admitted is harder to navigate than the admitted market by and large. A couple of trends to call out here. Carrier appetite is a pretty complex topic. I probably spent more time noodling on how to describe appetite, both from a data-driven perspective and even just in our marketing pages, than I care to admit. But whether it is different business classifications, different lines of business or coverage, which aren't necessarily standardized, different geographies, and I'd say size of insured are probably four key trends or four different characteristics. But that's really hard to do when, even if we're just talking about business classifications, there's thousands of NAIC codes. You've got different CGL codes for the hazard side of things to try and navigate and memorize. And so, if you're going to try to get a grapple of all of that, it's a pretty wide sphere of things. And then, across all of that broad swath of appetite, you need to have a bunch of different carrier solutions or wholesale broker solutions to cater to all of those. And then on top of that, given the non-admitted market isn't quite as caught up on the tech side of let's call APIs or instant quotes, that means that you're still typically going to need to go to an underwriter or a broker to try and place business. So where you need to have all the right relationships in place. Because, unfortunately, for an API, doesn't care how nice you are to it. It'll give you a quote one way or another. But versus a person, that those relationships will help actually get you quotes and business. And so that requires more extra upkeep from y'all's end as well. So, I think, Bradley, you might have some commentary here just from what you've had to do. And I'd say not over even the past year, but over the past couple years, especially because Alabama's a coastal market. I think you guys have been probably had an ENS strategy more in the early days before most agents had too.
Yep.
Alrighty. And I think one thing to parlay to before I think we get to a lot of the meat of the content, but just a quick stat. There are over 37,000 independent agencies in the country. And of those, that breaks down into 4,700 and 2,000 independent commercial agents. So, and there's a distribution here. I like to break it down about one third, one third, one third. So one third of these agencies are really big, probably fit into the top 10 retail agencies in the country. Another third would fit into the mid-size where, it's between three and, a couple hundred agents internally. And then you've got a lot of smaller agencies where, it might be one or two person shops that make up a lot of the agency demographic, especially in areas of the country maybe a little bit more rural, for some of those smaller agencies. But across all of that, and I think what the non-admitted market also presents an opportunity to is how do you really differentiate yourself as an agent? Where do you define a specialty? Where, how are you differentiated across one of these 37,000 agencies so that you can drive business to yourself versus competing with similar access that other agents do? And that's where I think we want to spend a lot of the conversation today is just, hey, given the realities of we've got an evolving market, where having the exact same access to markets, isn't just, that's table stakes at this point, then what do you build on top of that, to really drive and grow your book of business? Alrighty, and now I'll hand it over to Bradley now, I think, to talk through a little bit more of think of it as like the portal insurance case study, plus all of his knowledge of working with knowing other independent agents to define what a niche actually is, and both define and identify what that might mean for your agency.
Awesome. Thanks, Joey. Yeah. So what's interesting is we started Portal in 2019 after me being on the captive side for 6.5 years. And I knew what admitted, non-admitted meant, but I really had no understanding of the E&S market. 2 days in business, we were hit with our first agency bill situation, and I had no idea what that even meant. And so we obviously had to learn. We had to learn E&S really fast. We had to learn niches really fast, and honestly, I would put us up against anybody in the country of an agency our size in terms of how well we handle E&S business and that sort of thing. I think everybody here knows what a niche is. I think your agency as a whole is better off if you specialize in one or two different things. I think one of the mistakes that some people who go head on into a niche make, and I'd love to get your thoughts on this, Joey, is they pick one thing. And personally, I don't think you should pick one thing. I think you should have several things. I think it makes your agency more valuable. And I think it, look at it like investing from a diversification standpoint. Quote well doesn't just write one thing. You have several things you write really well. And I think that's what most agents need to look at.
Yeah, and I think that's a great analogy. Even if you want to call it a balanced portfolio, in investor speak, you're going to have your stocks and bonds and allocate some between. You're probably going to have a good portion of your book where it is a bit more admitted Main Street business, where you're probably going to get those because you've got great relationships with the insureds. They're local, some marketing that you've got, but then on top of that, having other tent poles around your business to have a couple niches that really drives some interest and also keeps you balanced. There are going to be times and years and where your niches might be stronger, and other times where the Main Street business might be better. So having both those, I think, makes a lot of sense.
Well, I think there's an important nuance here on this slide is a lot of times, at least the people that I talk to, insurance agency owners or insurance producers, you think of a niche as like a specific class of business, but it also can be a coverage type as well. You might specialize in home daycares, but you also might specialize in cyber for different types of businesses. There can be, you can do both, you know what I mean? And to be honest with you, sometimes the greater opportunity is in the coverage type, not necessarily the class of business. I remember a few years ago, we got linked up with a carrier that had a program for breweries, small microbreweries, right? And microbreweries have not been a thing in Alabama they've only been a thing in Alabama for like 5 years. And this was 2 or 3 years ago. And so I remember I had this grand plan where I was going to like go headfirst into microbreweries, right? I love beer. I like bourbon, all that sort of stuff. And I was going to do a podcast where I was going to go to the brewery, interview the brewmaster while drinking the beer. It was going to be this great thing. And so I did a little bit of research, and there were 5 breweries in Alabama. And I'm like, well, we're gonna hit our total addressable market really fast, so that's not going to work. Whereas a shift in that might be a coverage type of niche rather than an actual specific type of business.
Yep. I think maybe 2 things to build off there, one from actually a prior comment. But one is, especially as you're talking to insureds about this, they might not know what the coverage means. And so for them,
Right.
you're going to market and say, hey, we do this vertical, but internally, how you think about it, how you think about your strategy, it might be, hey, I'm going to lean onto the carriers where they have this specific product, or LOB. And then I think the other thing, because this is something that, and honestly, it did take me a year to fully untangle uh, the definition of what is wholesale versus non-admitted versus surplus lines. So I'll take a second just to give you a couple stats that I think I find helpful, and also some definitions. One is the surplus lines market and the non-admitted market, or excess and surplus. All of that basically means the same thing, which means that it is really just it is not an admitted product. And so now the second thing is that for example, for Quotewell as a wholesale brokerage, all wholesale brokers basically are able to write and specialize in non-admitted business. So I think one stat is that if it is a non-admitted policy, there's a 94% chance that it went through a wholesale broker. That might be going down a little bit, but I think by and large, think of wholesale brokers as really a big access point to non-admitted products. But the other thing is that only across the board, 70% of what wholesale brokers write is non-admitted. So there are some wholesale brokers that do write admitted business. For Quotewell, we are almost exclusively non-admitted. So we're 95%. But 5% of what we do, we have some admitted inland marine policies that we'll push, and are quite popular in Texas. But again, it's all a little bit different in learning each wholesale broker and like how do they think about their distribution? What are carriers that they represent? At the end here, if we have some bonus time, we'll go through and talk a little bit more about Quotewell's markets and things like that. But just wanted to unpack that again, this nomenclature around non-admitted and surplus lines, it can be confusing and how that interplays with being a wholesale broker versus not. I don't know if there's
Yeah,
anything else you want to add there,
and I
Bradley.
think explaining that to your customers is key,
Mm-hmm.
especially with more middle market accounts and larger premium stuff. One conversation we will have with people, because people, the Geicos of the world and Progressive have trained people to shop your insurance, shop your insurance, shop your insurance, and they go to 15 different insurance agencies to try to accomplish one thing, and they're effectively shooting themselves in the foot. So the way we explain that to customers is we say, hey, look, I'm Home Depot. You're coming to me to buy a Craftsman screwdriver. I'm not buying my Craftsman screwdriver directly from Craftsman. I'm usually buying it from another person who's then getting it from Craftsman, right?
Mhm.
And so we use that analogy of, okay, portal, Quotewell, carrier, and this middle person, Quotewell, may have 15 different markets. So come to us, let us do this for you versus going to 15 different agencies, and you're going to end up effectively with a higher rate than if you were just to pick someone who's equipped to handle your stuff.
Yep, I think that's a really good point because I almost guarantee, 99% chance if you go to your insured and say, hey, listen, we're working through a wholesale broker for this, they're not going to know what that means. And so explaining some of the basic dynamics there and why, what is the, exactly like Bradley said, using an analogy to help translate what the non-admitted market might be there, the role of a wholesale broker can be helpful.
Yeah, absolutely.
Great.
So everybody's heard the term generalist agency. Your generalist agency has somewhat of a simple to broad understanding of all different types of risks. They're going to write a lot of stuff. These are the agencies that are doing a little bit more shopping and less honed in specific work on certain niches. And I don't think being a generalist is bad per se. I do think that you limit yourself in some capacity with some risk. I think there's some vulnerability there for being a generalist agency. In my perfect scenario, I think you should be a combination of the two, and I'll get to that a little bit later. But like for us, for example, so one of our niches is trucking. Okay, we do medium to mid-sized trucking, and we have a producer here that 100% of the business he writes is finding people who have trucking accounts that are with generalist agencies, because everybody every generalist agency at some point runs across the nice size trucking account. They see 25, 50, $75,000 in premium. They get wide eyed and they write it, when in reality, they don't have the infrastructure in place, the training in place, and the markets in place to adequately service that account. And literally all he does is he targets people who are with these generalist agencies, or the account may look like something that's at a generalist agency, and gets them on the phone, points out holes in the policy or things that the generalist agency did wrong. 100% of the time, there's something he can find in that policy, pitches it to the client of like, hey, we're a trucking agency. This is what we do. This is how your policy is written wrong. If we change these things, you're either going to A, be adequately protected, B, you're going to have a lower price, or C, a little bit of both. And we move that policy over to our agency. So I think you can be a generalist and write some stuff, but I think the mistake that people make, I think everybody should be a generalist to some degree. Okay. Here's my philosophy on generalist versus niche. Okay. If you're a generalist agency, or you're and I'll talk a little bit about Portal and our journey and how we transition. We specifically started as a generalist so that we could discover our niches. I'll talk about that a little more later. But if you are a somewhat of a generalist agency, and I see this all the time in like these agent forums on Facebook, somebody will say, I'm looking for a market for a dynamite factory or a dog breeding facility or something just off the wall, right? And you guys know we get these weird leads sometimes, right? I had one the other day that was a mobile home park. We don't really do mobile homes, and this person came to us. It was a mobile home park, like 50 mobile homes, and obviously there would be some decent premium on that. I think the only time you should go after something that's out of the box, that's not something that you normally do, is if you are potentially looking to build a niche in that area. So in other words, don't chase premium, don't chase commission for something you're not versed in. The only reason you need to do it is so that you can learn that line of business or learn that coverage or learn that class, and then say, okay, we're going to go after more of these.
Yep. And I think maybe the one thing to build on top of there is that, especially, I think some of this is geography based as well.
Sure.
So if you are in, we've got, I'd say agents that are based in more of the metro areas. I think it's even more important that you're going to be developing a niche, because you're going to have more competitors even maybe on the same block as you. Versus if you're going to be the only agency in town, then you can probably have more reliable book of business based off of being, the one agency in a smaller population. And so that'll drive some of your niches. But even then, let's say you're out in West Texas, then you might be a journalist agent, but also your niche might be oil and gas. And that's one thing that you can do to support that. So even then, being able to cater to what's around you, I think important.
Yeah, I've got a buddy in Texas. Every time I talk to him, he's working on an oil and gas account. And you know how many oil and gas accounts I've worked on in Alabama? Exactly that many.
Yep, bingo.
And I think too, I look at the niche agency as someone who is an expert in that field, but they don't necessarily present themselves or even consider themselves an insurance agent. The guys and the gals who do this best, they consider themselves not part of the insurance industry. They consider themselves part of that industry, whatever industry they're selling insurance in. You know what I mean?
Well,
like I talked to this guy recently who was running this company that was a safety and DOT mock audit agency or mock audit company. And how do they make money? They're selling insurance. Right. So they're presenting themselves as, hey, we're doing all your safety and your CE and all that sort of stuff. But the way we get paid is we get you in line with all your DOT stuff and we're going to write your insurance. But they're presenting themselves in a completely different way.
Well, and you're exactly getting at a trend that I see the industry going to, which is really exciting, actually, is the agent role really taking on more of that risk advisory capacity. In that, usually when you'll see that, because, for some folks, insurance is an afterthought. And you can treat it as that. You can look for the cheapest policy, or you can say, listen, I want to make sure you guys are covered. I'm going to talk you through the risk that you might not even understand as much as a business owner. but then knowing how to communicate that degree of coverage to someone within their own niche versus, playing second fiddle to them. And so I think it's a really good point.
And I think being a generalist only leaves you with a vulnerability, but I think being a niche agency with just one niche or two niches it's just as vulnerable. I think you need to have several that you work on and maybe some generalist stuff built in there. Like Portal, we do personal lines, right? And we're even somewhat niched out on personal lines, but like we'll always do that because that fills in the gaps in between these big policies.
Yep. Alrighty. Well, I think we can probably skip over this slide because I think we had actually a bit of another one that goes into more of this later. Yeah, we'll go into this slide.
Awesome. So I'll start on this, Joey. So my advice to everyone is start somewhat of a generalist if you're not sure what you want to go into. Now, some people obviously they have a relationship in a certain field or certain industry or that sort of thing, and they want to dive headfirst in there. But if you're not sure, most people who I know, Joey, that have like I've got a buddy out of Georgia that's just got a phenomenal niche. It's one of these that's like so good he doesn't even tell anybody what it is. You know what I mean?
Yep.
And most stories of people who have awesome niches just kind of fell into it. It wasn't like they had this grand master plan of I'm going to go after armed vehicle drivers. They didn't just come up with it. It was something they were writing business just how a normal insurance agency would. They stumble across something, and all of a sudden the world is their oyster. So I tell everyone, if you're not sure, you need to start with an established book of business. You need to look at the type of businesses and the geographies where you are. Like my brewery example, like that may work great in Massachusetts where there's a brewery on every corner. It doesn't work great in Alabama. So something about where you are may help or may indicate where you need to go. But also like we're in 2024 and I don't think people care where their insurance agent is geographically located. So it may be that you look at something that's big in another state and you can do that from the state you're in, right? I've got a buddy in Alabama who specializes in insuring political campaigns. Okay. Just name a politician, he's insured their campaign, right? He's in Alabama. There's not many big time national political campaigns headquartered in Alabama, right? So I think it's looking at the overall market and that sort of thing, but starting as a generalist and every single lead that comes across your desk in a commercial capacity thinking, okay, what kind of research can I do on this? Am I learning to go deep into this niche? And if there's not an opportunity here, I'm not going to write it because I'm not doing this just to chase commission. Because the thing is, let's say something comes across your desk that's 50, 100, 200,000 in premium. The amount of time you're going to waste doing that line of business or that class of business that you've never done before, it would probably be more productive to do the things that you know.
Yeah, well, and I think two things to add on top of that. One, I think, and this is a lesson I think outside of insurance as well, but starting and building out the fundamentals as a generalist, I think is very helpful. Just because there are going to be lessons learned and applicable concepts as an agent where you learn being a journalist commercial agent where you can apply that and then learning the niches becomes that much easier. And then I think the second thing was actually, I worked for a carrier actually based in Zurich. You can guess which one it was. There's an underwriter there that there's a phrase he used, you don't want to chase the perfume of premium. And so sometimes you've got this big allure because you've got that big account. But there's another thing that I'd say, and this is really a deeply held belief I have, which is work hard and the money comes. And so, if you put in the work to learn that niche, and then guess what? You're probably going to have, more of those big accounts start to gravitate your way. Versus just saying, I'm going to go chase big accounts, and then you land one and you say, well, what do I do?
Right.
And so
you're the dog that finally caught the tire and you're trying to figure out how to drive the car.
Bingo. Yep.
So here's a few examples of things that we've done. These are a few of our niches. This is actually a little bit outdated. So one thing that we did, so we started our business just personal lines and specifically new home buyers. So even on personal lines, we had a niche. Like our first year in business, we only wrote new home buyers. May not have been their first home, but it was built into a mortgage transaction. Okay. We transitioned into small and medium-sized businesses, daycares, small and medium trucking, and then there's one missing on here, which is real estate investors, which is our biggest niche right now. And one thing that we wanted to think about, and the reason I got Joey and the guys to put this slide in here, is we wanted to hone in on our niches on where are they located at geographically. Okay. Do we go down to the county level, like you see we did there with a new home buyer? Do we go statewide or do we go regional? A lot of these are more regional now for us. So we wanted to hone in on the geographic location of them. We also wanted to hone in on the demographic of them. Okay. Like you see there on small and medium trucking, experienced, responsible, currently insured, how many trucks they have, right? What are the demographics of that account? In other words, let's say we're writing contractors, right? We got burned one time because we were looking into, we had an excavation contractor that was coming to us for insurance. We didn't write any of those, and we were like, hey, this might potentially be a niche. So we wrote the account. Well, it turns out that guy only bought the policy so he could get a job. Those are the ones you want to avoid, right? You want the folks that are buying insurance because they're being a responsible business owner and it's the right thing to do, not the person that's just trying to get the piece of paper. Coincidentally, that guy ended up committing insurance fraud. It was a whole thing. And then my favorite thing is psychographic. Like, how do they think? How does your target business owner and your target niche think? Like if you see there on the bottom right, like I want them to think like a business owner. I don't want them to think like a guy or a gal with a truck. You know what I mean? They have to be willing to provide us the info on their account, right? We ask for one contact, right? We one of our niches is homeowners associations. We have 6,000 condo associations in one county here where I have an office. And a lot of times with condo associations, you can have 15 contacts that are all trying to tell you something, then they're all different, right? So like one of our things is when we talk to commercial accounts, it's like, we need one contact that's our point of contact. I'm not talking to 15 people, and it helps with the flow of information and it keeps everybody on the same page. So where they are, what's the demographic of the account, what's the makeup of the account, and how they think, I think is super important, and it allows you to qualify people a lot faster.
Yep, I agree.
One of the things too we constantly talk about with our commercial accounts is we want accounts that aren't stepping over dollars to pick up pennies. One of my producers said that one time. I'm like, that's absolutely brilliant. You don't want the person, i.e., you don't want the person who's willing to cut coverage or commit fraud or lie to you just to get their insurance on the books, because they know and we know it's going to cost them and us way more down the road. So when thinking about your niches, you know, number one is obviously what do you have a passion for, right? You personally, and excuse me, it may not be the actual thing that you have a passion for. It may be adjacent to that thing. You know what I mean? Like a good example is you have someone who's an athlete in school and they're looking at their career. They're not good enough to be a professional athlete. Maybe they can be a coach, right? That's a great example for that sort of thing. What business do you know really well, right? Like my dad was an electrical contractor. I grew up around that world. I have zero passion for contracting, but I know that business really well because I grew up around it, right? What's the most profitable, right? There's certain niches out there that are just simply not profitable, that there might be a good amount of premium on, but they aren't. Trucking is one, right? So like one thing we've done with trucking is really honed in on the type of trucking accounts we're writing. That way we don't go belly up along with them. And then what areas are growing? You know, I've got a buddy, medical marijuana was recently approved in Alabama. I've got a buddy who's diving deep into the medical marijuana, CBD, you know, getting out ahead. I look at some of this stuff as like buying stocks. You buy low, sell high, and that sort of thing. Asking your producers or your employees or even potential employees, hey, what are you passionate about? What industry do you know? What industry are you coming from? And so what we do at Portal is we have 5 or 6 like strong niches that we hone in on, and I may not necessarily be well versed in them, but we have an employee who really knows that industry. That's how we got into trucking. Like I don't know trucking really well, but I had one employee who really knew it, and then we've hired 2 or 3 more, and we let them take that and run with it. And it's a really good employee retention tool too, because they feel a sense of ownership in that this is my niche there, and they're giving me the opportunity to build around that. We've got another employee who, just to be frank, is young but responsible, and is big in the bar scene. So her thing is liquor liability. Like that's what she wants to do. You know, one tactic that I've used when hiring new team members is, so I'll give you an example. I had a young man that came to me a few years ago wanting to come to work for us. And one thing that's important to me here at Portal is I want them to want to be at Portal. I don't want them to come to me because they think I'll pay them the most money or because they just want a job, right? We want people who want to be here. It's not an easy place to work. You have to want to be here to be here. And I had this guy who was like pushing me hard to hire him, no insurance experience. He was coming from the restaurant industry. He had owned a restaurant. He had worked at a few restaurants, managed a few restaurants. So his niche was going to be restaurants. And restaurants in Alabama have decent premium on them because liquor liability is really expensive, and so is property. So I told him, I was like, hey, do this. I gave him a couple word tracks. I said, I want you to call all your restaurant owner friends, and I want you to at least get them to agree to let us look at their account, if not possibly get a copy of the policy. If you can get me 10 of them, I'll hire you. And it's a really good litmus test, not only to hire that person, because nothing says you can do the job like a job interview process that makes you do the job that you're going to be doing, but you can also see like, hey, what's the opportunity in this niche with this guy or this gal? So we look at, go ahead, sorry.
Yes, I think that you've covered at least part of this, but I think if you think about this, and if you notice the circles in the back of the slide, we're starting to hone in here, is that you're starting broad and then working your way in to figure out exactly what that next thing is for you. But I think that this might be one of the maybe most overlooked phases to do earlier versus I think exactly what Bradley was mentioning earlier of like, hey, you got an account? Sure, let's do it.
Yeah, exactly.
You're skipping this step. So, with that, I'll hand the mic back over, but don't want to undermine step 3 here because it's easy to try and avoid this.
It's super important. One of the tactics we will use, especially with wholesalers, is we'll get with, because different underwriters within wholesalers have different things that they like. And one question we'll ask some of the wholesalers we work with is we'll talk to the underwriter and say, hey, what do you like to write? Because if that underwriter also has a passion for that thing, that's just going to make it that much easier for us to get something approved and deep dive into that niche. The other aspect is, how do we get a carrier appointment for a niche we want to be in that we can't be in because we don't have that carrier appointment? And one of the tactics that we use is, so I'll give you an example. So early on, we wanted to go deep into contractors. We didn't really have a carrier that would do contractors, and there was one carrier that we needed, and that particular carrier also had another carrier that they really liked beating. So I went to my sales team and I said, hey, I've got this meeting with this carrier rep on Tuesday. I need you to find me as many prospects that are willing to let us look at their account that have XYZ carrier. So I sat down with the carrier rep, opened my folder, and I told him that I said that. And I said, here's 1, here's 2, here's 3, here's 4, here's 5, here's 6, here's 7. And then, so I'm showing them that, hey, we have the ability to prospect not only accounts that you want, but accounts that are with this carrier that you like beating. Okay. And then I follow that up with, hey, look, because they're always going to ask, well, how many contractors are you doing now? And you feel kind of stupid saying, well, none. Right. But what you can do is you can say, well, we don't have any, but it's because we don't have you. Right. I'm showing you that we can do the work. I'm showing that we can send you the business, and all I need is an opportunity. So that's one way that we've used to get appointed with some of these carriers. And then honestly, just treating that like it's a prospect. Most sales are made between the 7th and 12th contact. Like, you've got to follow up with them the right amount that they're willing to give you a shot when that opportunity comes.
Yeah. And I think maybe the one thing I'll say there is that on the flip side of that, we love it when agents ask us those exact questions. Hey, listen, what do you guys see a lot of? What are you having success writing? And then we go the next step further there, and we try and create some marketing material around those exact products. And, those are things that we highlight on the website as well. Say, listen, if you go out and solicit this business, there's a very good shot that we can get you a quote back.
Yeah.
And so, always consider, for those of you that are already appointed with QuoteWell, feel free to reach out and ask. You're taking a look at the website, you have any questions, contact us. And we'll be more than happy to spend a few minutes on the phone or email trying to educate you up on that.
Yeah, and from a marketing standpoint, one of my favorite things to do is almost building an alternative brand that appeals to that niche, right? Like one of the things that we did is we have an Amazon distribution center here. So a lot of the trucking that we do is Amazon related. We created Portal Trucking, which to the consumer looked like a separate brand, even though it was the same agency. And the logo looked suspiciously like the Amazon logo, right? Enough that we couldn't get sued for copyright infringement, but building that separate brand around that works really, really well because it appeals to that niche, right? My friend Scott Howell, who's the guy that's diving deep into cannabis right now, created 5 Blades cannabis insurance or something like that to like appeal to that market when everything is actually going back to his agency. So it just gives you that vertical where to that prospect, you don't look just like the average generalist agency. You look like somebody who specializes in this thing. And then to take that a step further, one of our things that we do a lot of from a coverage standpoint, not a lot of, but a decent amount of, is cyber. It gets a little hard in Alabama. Not a lot of people in Alabama want to buy cyber. So a lot of our cyber is outside of Alabama, but running YouTube ads or Facebook ads specifically to businesses who we know have a need for cyber. And we put some kind of lead magnet out there. So for cyber, ours is we can do a dark web scan of your company and your company's emails and your domain and all that stuff and send you back a report that shows, hey, this is where your vulnerabilities are. And we use that. We're giving them something of value on the front end so that we can then have the conversation with them about insurance. So that lead magnet works really, really well. And then for trucking, it may be safety checks. We utilize Yellowbird for that. It may be mock DOT audits, whatever. Give them something on the front end to act as that lead magnet. That way they feel like they're not just sending us their insurance and we're going to quote it and write it or try to sell them or whatever. And that works extremely well. The cyber thing gets a little interesting because you kind of feel like the mafia a little bit because you're like, hey, here's all your domains that are vulnerable. You need to buy this insurance from me. But anyway, so those are just a few things we do around from a marketing standpoint.
Well, one thing, I know it's a little bit of a tangent here, but one thing that it was actually one of my dad's buddies who owned a printing shop. And it was in a rural area where he never thought he needed cyber coverage, cyber extortion. And so I needed to help him out on that side because he's being demanded to be paid in crypto, and my advice was you don't negotiate with the terrorists. And after the event and everything, making sure that we actually got him appropriate cyber coverage. So one thing I will give the shout out to Bradley here is, if you're not pushing, I think that cyber is a new thing that you can, even whether you call it a niche or even some of the standard generalized coverage, agents should definitely be educated on.
And some of the premiums on cyber are really like there's some beefy premiums out there.
Yep. Some of it's really quick. You can almost add it just based off quoting off a GL policy, or the same information from a GL application, but others, definitely want to add that on there. So shameless plug for cyber.
It's me or you?
Yeah, I think this is you, and then I'll add my addendum at the end.
Let's skip to the next one. I think I've pretty much covered this. So I've covered a lot of this too. Real quick. So our story and how we built and found our niches. So like we started our agency. I came over from the captive side, and our plan was to always be personal lines for 12 months. We built the agency for that 12 months strictly on personal lines. I'm not one of these agents that used to do personal lines, transitioned to commercial and started like poo-pooing on personal lines. Like we will always do personal lines because we're really good at it. But our plan was, and it happened exactly like we planned. We started the agency. We were super unprofitable for 6 months. We got it profitable at 10 months. At 12 months, I stepped away from the business, i.e. I'm no longer the top salesperson. I'm no longer talking to clients, that sort of thing, and really learned commercial. So for 6 months, we did a lot of generalist commercial. We skipped Main Street commercial, and I tell a lot of agents to do that. Like if you're going from personal to commercial and you want to write some bigger premium stuff, I always tell people, don't worry about Main Street commercial, because everybody writes Main Street commercial. You're going to have more competition, or at least just as much competition as you do with personal lines. And guess what? The Main Street commercial account expects the same level of service as a middle market commercial account. So we skipped Main Street commercial and we went right into 2 or 3 niches. We started with real estate investors, transitioned to trucking. From there, it went to hotels and condo associations and cyber. And that was our plan. And so it worked. It worked very well. So I tell everybody, if you're not sure, start as a generalist, stick your toe in different verticals to see how it works. And by the way, like, we've had some that we looked into that ended up not working out, right? It was like, yeah, there's not enough meat on this bone or whatever. And now I feel like a really well-equipped shop, because we have the more generalist side, we have the niche side. I think it makes the agency more valuable than if we were just a generalist or just a niche agency.
Yep. Well, I think maybe 2 things just to double tap on there. One is you can see portal story starting broad and then going, and just like we were chatting through in the last part, is really executing. And that is something where there's a phrase from someone that works at Quote Well, where everyone's got to make pancakes. There's always gonna be hard work that goes into it. And so saying, hey, we're gonna research, we're gonna plan, but not gonna pound the pavement, then you're not gonna build a book of business. So
Yeah.
got to make sure that at the end of all of that planning, you're getting out there and producing, drumming up that business.
I had a producer
But
last year, Joey, that wrote a $1 million account, $1 million premium account. It was the largest account she had ever written in December, and worked on it for a few weeks and came to me. She's like, this is really hard. And I'm like, yeah, the big ones are hard. That's why they're big.
yep,
That's just,
bingo.
it's just part of it.
Yep. Alrighty. Well, I think we're getting close to the end here. Yeah, I think maybe just the spark notes at the end of the presentation, which, first off, I appreciate everyone joining this. Hopefully you all found it valuable. But a lot of niches will rely on E&S, and given the industry is broadly moving towards more E&S, probably not a better time to hop on board like the present, and try and really lean into that. As a whole, there are fewer agents that are focused here. There are more Main Street agents. Part of it because it does take a bit more work. Studying up on that, learning the coverage, developing those relationships and distribution to get there. But strong relationships with carriers and with brokers can really help enable you here. So you don't have to do it alone. Lean on, folks. We want to help. And I think from a couple different tips and tricks here, going through that first process to really identify and plan and research where you want to go. And then after that, doing what you can to be studied up. The internet is a great place to start. Mix of GPT plus other more insurance specific resources, I think, are great. Places where you can get CE credit and double tap for that. I think that is one thing that a lot of folks probably might not see as much, but there is excellent CE credit out there that will be very niche specific. And so to the extent that you can double dip on that, would 100% try and advise. For example, for Quote Well, we're actually working on getting CE credit approved for some of our niches that we can support. We'll hopefully have that in early 2025. And then the last is, again, building strong relationships. Bradley and I as an example. That's something where, it's something that it's great to have that relationship both between your agent and your broker. So you can talk honestly, have a good conversation about it, and make it less of a transactional relationship and seeing success in each other's businesses there.
One thing I'll add too, Joey, is the longer you do this, the easier it gets. And I'll give you an example. Like with our podcast, when we were first bringing guests on in the early years, I would have to spend the first 3 paragraphs of the DM explaining who we were, and then it was like, I want you to come on the podcast. And now it's like, hey, will you just come on the podcast? Right. So once you really deep dive into certain niches, especially in your geographic area, people start hearing your name and know about you. And it gets a lot easier to prospect business because there's social proof built up. There's a reputation built up for your agency in that niche. And you can just you come in with a little bit of swagger in that the prospect knows what you're doing, and you can just say, hey, we want to take a look at your stuff, or we want to help you. So it
Yep.
gets easier. It's always the hardest at the beginning.
Yep, and I think that's for any entrepreneur in any endeavor. I think absolutely where the earliest parts are where it's toughest. You're gonna, there are gonna be days where you feel like you worked and you didn't quite see the benefit there, but then, at the end you keep on going at it and build that resilience, and you'll have a good business at the end of the day. Great. And I think, Mary, this is your plug now.
So definitely if you have questions, please add them to either the chat or the Q&A box. I have both of them pulled up. So feel free to drop those in there. But while questions are coming in, wanted to share that we've put together this bonus. So if you enjoyed this content and want, a workbook that you can use to actually work through these steps yourself, I have the QR code here on the slide. I'll also send a link to this in the follow-up email with the webinar recording. So you can listen to Bradley and Joey talk through how to find a niche and fill out your workbook at the same time. So hopefully you found this helpful, but other than that, I think we just have a few minutes for Q&A. I know we went a little bit over, but yeah, thank you guys.
All right.
One question, what is meant by a vertical? I'll let Joey, you want to answer that one?
Yep. So I'd say vertical and niche. I think synonyms probably easiest way to put it there. And so I think at least on our website we mostly describe our niches as verticals, but they're one and the same. All right. Well, I think that might be it in terms of questions. We've got anyone, if you shoot over a question, I'll take priority, but we do have maybe a very quick portion here. One, I feel very strongly that whenever Quote Well does do a webinar, it's not a giant Quote Well commercial. I want you guys to get something out of this. But to the extent that there's some related content, which is really what are Quote Wells, verticals or niches that we could do to best support you all. And so a lot of this is available on the website, but I'll go over this for maybe 2 minutes here. But we do have some popular options where we do hit quite frequently. And so artists and contractors, especially some of those tougher to place ones, pool contractors, roofers, things like that, we've got some great markets. Auto repair, I think, has been a tougher market. And so, trying to find those, again, repair shops. We do some smaller dealerships as well. But we do offer coverage on a garage form, which I think is a little bit more increasingly rare. We've got a great underwriter that supports that. Just like Bradley said, if you got a producer that loves that, also having underwriters that obviously love that and have a lot of experience helps out. Then you start to go to some mid-market construction. I think mostly on the commercial construction side, but we'll do some tract homes, things like that on the residential side as well. Daycares and churches, I think, have been two examples where the admitted market's pulled out quite heavily. And a lot of things are getting non-renewed, and so we've been able to be supportive on both of those. To support our West Texas friends and really just up the pipeline states, energy as a whole. That's more mid-marketing, some larger accounts there. LROs, and even some that are in some coastal areas as well. We're getting increased capacity again in tier 1, tier 2. And then manufacturing and some real estate. Habitation's one that I wouldn't say we can take on some of the larger apartment complexes yet, but we're hoping for that to change over coming months. But by and large, if there's a question, submit it to us. If we can't find you something, we'll get you a quick no. I'm always happy to hop on the phone or email and discuss. And then we do email out our bi-weekly Quote Well Insider. And so for folks here, I think we'll probably end up, if you're not on the email list already, hopefully adding you to that. Where we'll email some recent wins so you can start to learn a little bit more about our appetite niches as well. And then maybe the last slide here very quickly. Let's actually skip over this one. We do have binding appointments where we do have in-house underwriters where we can do quicker turnaround time than our competitors. That's a huge advantage. But the other piece here is that we do have different clusters ourselves where we do have a good number of carriers really backing us, meaning we're likely to get you a quote, not just one market. So energy and construction being two examples, they're really in the mid-market. And then increasingly property capacity. And that's something that we've heard and we know it is a hard market, so we're doing what we can to support that. And then the last is really if there's a good tech forward non-admitted carriers that are coming in, this is where we're seeing a lot of the innovation. So we're quick to adopt those carriers and then really providing new solutions to y'all where you might not have heard of them before. So hopefully we're a great access point for that innovation on the insurance side. All right. We had one question here from Ross. Are you automating the underwriting? So I think that there's two pieces here. One, if it's in-house authority with us, we have tools that the carriers will grant us access to provide some of that pricing, but we are automating certain pieces around that. So for example, the external data gathering, that's something that's very time consuming. We can automate more of that. So it gives our underwriters more time to go and actually, provide more leverage to themselves for identifying the right coverage, et cetera, et cetera. So to the extent that we can minimize as much copy paste out there as possible, we'll do it. All right, well, I know we're exactly at time. We got folks who have to head to their next meeting. So appreciate y'all. Appreciate you, Bradley, for hopping on board here.
Thanks, guys.
And we'll connect soon. All right, thanks, y'all.
Thank you all.